Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because now that Bitcoin's overdue pullback seems to be underway, it's finally time to update our how low will Bitcoin go chart. Now, it's crazy to think that just over 4 months ago, we published the previous version of this chart in a video called Are You Ready? And at the time, everybody was celebrating the looming US strategic reserve and 500K Bitcoin, and corrections are impossible. But we said that based on price structure, it was likely Bitcoin would actually go back below 90K and possible Bitcoin would even go back below 80,000. And what do you know? Those are the exact levels we ended up reaching. Now, of course, we had no idea that the tariff crisis was going to happen, and that's what was going to send Bitcoin there. But those probabilities ended up being spot on. And we stuck to the fact that it was unlikely Bitcoin would revisit 60,000 once all of those same people that were bullish became bears calling for a bear market and an end of the global world order as we know it once Bitcoin hit the possible region. And before that, just over 11 months ago, when this chart actually used to be called Where Will Bitcoin Bottom, Bitcoin was trading at 70,000 and the ETFs were gobbling up billions of dollars of Bitcoin. Everybody was saying corrections were now impossible, but we said it was likely Bitcoin would revisit 60K, and it was possible Bitcoin would revisit 50,000. And what do you know? Those levels ended up being hit. Again, we couldn't have foreseen that it would take the Japanese yen carry trade implosion to send Bitcoin to that possible region. And once we were at those price levels, everybody was saying they were going to go all in at 40K. We have to go back to 40K. I'm going to go all in with my Bitcoin position at 40,000. And what do you know? Just like the tariff crisis, Bitcoin never ended up hitting that price level that everybody was saying they wanted to buy at. And that brings us to today and the new version of this chart. Even after 7 green weeks in a row, I was still getting so much pushback on Twitter for even acknowledging the fact that we could see a correction because everybody was so excited about the Bitcoin conference and corporate treasuries, and here comes the supply shock super cycle and 200K is destiny. But what do you know? After an almost 50% gain, investors do end up taking some profits and locking in some of those positions. And now these areas are laid out based on support levels. So the likely region is us revisiting this previous all-time high. The possible region is us revisiting the 20-week moving average and retesting this previous resistance, getting flipped into support, not to mention our previous range low. But this region is labeled as unlikely because it took so much drama and fear and panic to send Bitcoin back to 75K and a 20% correction in the S&P 500. And I don't see that happening on this correction. If anything, I expect this to be much quicker and much less painful. We could even bottom in the likely region and take off from there once everybody flips bearish and starts calling this a 2021 style double top. But we know Bitcoin loves to go lower than most investors are prepared for, especially when so many people have opened leveraged long positions. So I could see Bitcoin revisiting the 80,000s before taking off, but I don't think the top is in for this cycle. And now I know a lot of new investors hate it when I share different probabilities. They want to know exactly where we're going to bottom and exactly where the cycle is going to top. But every experienced investor knows that you can't lose if you're prepared for multiple outcomes. So what am I doing with my portfolio? We've taken some profits over the past few weeks. I have a pretty decently sized cash position in case the cycle is over, but my system as of right now didn't have me make any changes this week. And I'm just going to sit on my hands for now and see if there are going to be any buying opportunities, but I don't see the need to make any major changes. I have a solid enough cash position that I've taken advantage of this bull market quite a bit, but I still have enough remaining upside exposure to take advantage of the finale blow off top we're likely to see sometime later this year. And this is all part of my portfolio automation system that I cover in the Crypto Enjoyers program, and early bird pricing is still available as I build out these mental models modules for that course. But as of right now, it's nice to see sentiment resetting from greed back into neutral. We essentially made our way from extreme fear all the way to greed with very little consolidation or pullbacks along the way. And this is actually something I covered in the free weekly report published on Monday. I said that I wouldn't be surprised if we see a brief dip back to the neutral region sometime soon before we make our big move into extreme greed. And now that we have seen that type of price action, as Bitcoin goes lower, I expect the double top calls to get louder and louder, and I wouldn't be surprised if some terrifying bearish narrative shows up and takes Bitcoin back to the 90,000s and convinces everybody that this has to be a rerun of 2021 and that there's no way the cycle top isn't in. And there's also a lot of reasons for this. This is a classic buy the rumor, sell the news event. So many people panic sold and got terrified during the peak tariff drama. And then we had a straight rally right to our local top that we have as of right now. And that local top coincided with the US courts blocking the Trump tariffs. So the best time to buy was when everybody thought it was all over and trade as we know it was no longer happening. And then the best time to take profits was actually once everybody was convinced it wasn't a big deal and that everything was going to be fine and that the courts ended up blocking those Trump tariffs. And I think a 120K to 140K price target is a lot more reasonable based on current price action compared to everybody targeting 200K as of right now. We usually tend to see those big round numbers get front run. So I would be very happy if it doesn't happen, but I definitely wouldn't rely on it. We know we've been seeing huge inflows from these Bitcoin ETFs, but it's also normal to see some profit taking as well. And that profit taking is usually a lot less than the inflows that have preceded it. We also know that Bitcoin conferences are notorious for being buy the rumor, sell the news events. This is actually what we saw in 2024, a quick and clean rally all the way into the conference. Funny enough, the big headline at the time was that Trump, a presidential candidate, was going to be speaking. And then we saw a sell the news event and big sell off afterwards. I'm not expecting this one to be as aggressive as the previous time, but that also aligns with the gap we have on the S&P 500, which has also essentially gone up in a straight line and is overdue for a correction before it heads higher as well. And although I don't blame many investors for believing this is going to be a 2021 double top repeat because so many investors joined in that cycle and were traumatized by that experience because so many people were expecting higher prices, but I have seen this happen every single cycle since I joined in 2017. In 2017, we ended up having that incredible parabola followed by a crash, and a lot of the newer investors like myself believed that we could see a double bubble like 2013. And even though that sounds insane after knowing what I know now, this was actually a very popular narrative at the time. And in 2021, we were expecting a 2017 type parabola to take us all the way to 100K. But once we had that 50% correction in the middle of the year, everybody started calling for a 2013 style double bubble. And now here we are today. As soon as price structure starts looking like 2021 whatsoever, everyone starts comparing the price structure to 2021 and calling for an imminent bear market. But if anything, I think this is just a healthy pullback and pause for Bitcoin before our final big move higher. And now the time window is really beginning to shrink on my early cycle scenario base case. We could still have this quick leverage flush followed by a final blow off top move. But if this correction ends up going on for a couple of weeks or a couple of months, I will happily begin adjusting my view based on the current data, but I still believe it is unlikely that the cycle is over. If anything, I still think we are still on track. And that's why I called Monday's free weekly report that we're still seeing long-term holder accumulation and we're not seeing aggressive selling from long-term holders yet. We're also seeing accumulation from whales. They're not taking big profits here either. And we're still seeing narratives and announcements all over the place about Bitcoin strategic reserves. Pakistan was the one that joined the fray most recently, and we're still holding above our range breakout level and the psychological support at 100K. So I still think we're on track for higher prices. We also still have strategy buying a bunch of Bitcoin and taking that supply off the market. And we're still seeing a lot of announcements from different raises to buy more Bitcoin. We also saw Trump Media Group raising money to buy more Bitcoin. We saw GameStop finally buy Bitcoin. And this obviously isn't one of the best signs that we're still early. This is what you'd expect at the late stages of a cycle, and the market seems to agree because after they made the announcement, GameStop shares actually dropped just over 10%. And when you think about it, this isn't really surprising. I mean, this was somewhat innovative when Strategy did it, especially because it was in the previous cycle when prices were a lot lower. And even though Saylor is raising his cost basis aggressively, At least he's not starting the buying at over 100K. But these other treasuries that are raising money to buy at 100K plus Bitcoin, I just think it's only a matter of time before traditional investors say enough is enough and start selling those shares, because they are over here buying Bitcoin at 100K per coin, and they are probably going to get absolutely pummeled in the next bear market, which could happen within the next year or so. As for macro, we still have rising global liquidity, so no huge warning signs there quite yet, and it says that Bitcoin's rally could carry on for longer. We're still maintaining the macro breakout, and this is a very zoomed out time frame, so these things can take quite a while to play out. But as long as global liquidity keeps going higher, I don't see any huge warning signs quite yet. A lot of that is going to depend on the US dollar index. It keeps looking like it might be putting in a higher low and wants to rally higher, and then it puts in a huge bearish wick and looks like it wants to break down. But until it actually picks a direction outside of this little range here, I don't expect any huge moves from global liquidity or risk assets until it picks its next direction. As of right now, the market is still pricing in 1, 2, 3, 4 rate cuts for 2025, which isn't a ton, but is definitely better than keeping rates paused where they are. We're also waiting for the Fed to announce that they're going to be stopping QT, but as of right now, all they've done is slow it down. We saw a pretty solid inflation print yesterday, with core PCE, the Fed's preferred measure of inflation, coming in at 2.5%, which is 0.1% below what the market was expecting. So it's great to see that inflation is still headed in the right direction. The labor market is still pretty flat in terms of the unemployment rate. So it's nice to see that the labor market isn't collapsing quite yet. So I don't see any major recession fears. And as of right now, the Atlanta Fed is forecasting 3.8% GDP growth in Q2, which is the exact opposite of what you'd expect in a recession. So I think we're still in the clear as of right now, and I think risk assets realize this. So although we could have pullbacks for Bitcoin and the S&P 500, I don't think the cycle top is in quite yet. We also had some pretty pivotal announcements this week. Circle, the issuer of USDC, is finally going live with their IPO, so I can't wait to see how that stock performs and what demand for it will look like as stablecoin adoption increases. We also had the SEC saying that protocol staking isn't a security transaction, which is huge for ETFs being able to stake the assets that they're holding, and that should bring demand to some of those ETFs. And we also finally saw FTX payouts begin, and it's about $5 billion. Now, I'm not convinced these investors are going to put that money back into the market. The market is almost 10x higher than where they lost this money. And if anything, you would hope that maybe what they had in FTX was only a small portion of their total assets. So if some of you are involved in this, I'd love to hear from you in the comments below, but I don't think this is going to come back into the market in any serious way, even though that's a narrative I see being spread all over the place as of right now. And now moving on to Ethereum, pretty ugly wicks here as of right now as it tries to reclaim that previous range low at 2,800. It does look like Bitcoin might drag it down here to maybe around 2,100 before it's finally able to break through. I know a lot of people are getting excited that Ethereum finally has its own sailor with Sharplink Gaming, but a dying company raising $1 billion to buy Ethereum alone isn't going to make a huge difference in my opinion. And if anything, this is just a trend we're seeing from desperate companies right now and doesn't actually make the asset itself more appealing than it was before that company decided to do that. As for Solana, getting below its range mid as of right now, we really don't want to see a close below that. Otherwise, we'd have to start targeting the range low. And these wicks to the upside are very similar to the ones we saw on Ethereum. So hopefully this is just it being dragged down by Bitcoin. Solana does tend to trade like a leveraged Bitcoin, but we'll see how that develops going forward. And we are starting to put in lower lows here on the Bitcoin pair, which is a pretty concerning sign over what we can expect over the next few weeks or so, but we'll continue to monitor it. Altcoins continue to get beat up. We have Solana back in the negative over the past year. Ethereum still down 30% over the past year. Bitcoin still shining at 55% gain over the past year. And as we predicted a few months ago, Elon Musk is now leaving Doge, which means the deficit situation is only going to get worse. And although everybody says they're on board for cost cutting, as soon as it starts happening, everybody hates it. And Congress is showing no effort at trying to reduce spending, which means as of right now, The trend of the deficit is only worsening, and exponential debt growth means exponential money supply growth, and this is bullish for the assets that we price in US dollars and other fiat currency like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.